Hello, this is Steve with the Free Bullion Investment Guide. Today is March 23rd, and I'm doing a review and outlook on the price of silver. This is silver's 4-hour chart. And in review of last week's video, I had shown you all of these patterns, which this chart pretty much looks like a mess, but I will try to decipher it for you. First, we have a head and shoulders pattern, which I pointed out to you. This gray line is the neckline of the head and shoulders pattern. That was denied last week. We can clearly see that the price of silver moved up. Also, I showed you this rising expanding wedge right here. Here's the upper trend line and clearly the lower trend line of the rising expanding wedge. It's still very much intact and very much relevant. That is also a negative pattern, but the head and shoulders pattern can be removed. It was denied. It was a negative pattern, but it was denied as the price of silver moved higher last week. Let me just size things up here a little bit better. Anyways, we also had a falling expanding wedge, which was broken when the price of silver moved higher last week. Now, why did it move higher? It moved higher because the Federal Reserve did not raise rates and basically stated that they weren't going to raise rates for the rest of the year. We also then had a bit of a dip in the price of silver, and that was mostly because some leading indicators showed that the U.S. economy was still growing. But then actually the price of silver continued to move. It moved opposite of gold, actually, at the end of the week. It moved basically sideways. And basically, I think that's for two reasons. Silver is more of a industrial metal than it is a safe haven. And it tends to follow the market, and it clearly is more volatile than gold, and it fell more so than rising in price. It mostly moved sideways, but the moves sideways were because of worse than expected PMI out of the Eurozone, and the yield curve is starting to show signs of inversion, which are not good. And I will have links to all of these pages down in the description section below. So it kind of basically tells silver, that the industrial side of it, there will be less demand, which also caused more sell-off than buying. In the outlook for silver, we still have the rising expanding wedge, which is a negative pattern. And this falling expanding wedge can be removed. It was confirmed last week. However, there is a new falling expanding wedge. If I can find, I ghosted in the it's actually a falling wedge. I gotta redo the label there, and I'll just quickly do it real quick. It's just to show you some added areas of TradingView.com. I use the free section of TradingView. It's very I loved all their charts. They really supply a great charting platform here. And if you want to subscribe, there is a link down in the description section below as well. But again, I use the free side. You can clearly use the free side as well. You just have to deal with pop-ups. That's the only problem. Pop-up ads do come up once in a while. It doesn't take you to another page, but it can be annoying, especially when you're doing a video. So anyways, we have a falling wedge here, which is a positive inside of the larger negative rising expanding wedge. Now, a few things to pay attention to next week. We do have a GDP revision for the U.S. for the fourth quarter of 2018. Excuse me. Fourth quarter of 2018. It could be revised down to 2.2%. That's what the market is expecting. However, it's really, nobody really knows. It was reported as 2.6%. Depending on, silver could take that news either one way or the other. A bad number could be bad for silver because the industrial side, more than 50% of silver is used for industrial purposes, where that's not the case for gold. Gold is about 75% or more used on a safe haven money level than gold. So, I mean, than silver. So, anyways, so the economic outlook could be bad for silver, which is really why when we see silver move, we see it more drastically move, either up or down than gold. Gold is much more reserved than silver's movement, and so in the outlook for silver, we could see it break the falling wedge. It could clearly do it this week because this. This wedge is so narrow, to be completely honest with you, but the rising expanding wedge could also be broken. We'll likely have to wait and see what will happen. So the 1550 level still stands at resistance. It was broken, but it could not, and it did clearly break above it. It couldn't break the 1570 level, but it could test it tried to test last week again the 1550 level, but it could not close above it. So that's what helps it stay a resistance level. This was posted in last week's chart, last week's video, so I'm going to keep it for now, and we'll have to see what happens. So there's another one of those pop-ups from TradingView. So anyways, and that's the extent of it. They do have a larger window, but it comes up like every 5 or 10 minutes. I'm really not sure, but again, it's a great platform. They offer everything. You go in here and you type in what you want, and they offer just about every asset you can possibly look up, including Bitcoin and all the Bitcoin. So anyways, not to get off on that subject, on the subject of silver here. So we'll likely see what happens, which way silver will move. I thank you for your time. Take care, and God bless.